Now joining us to make sense of all of this is Realtor Tiffany Hamilton. Welcome back to the broadcast. Glad to have you here.
Welcome.
Let's do the math here. 3.29%, a record low for 30-year mortgage rates. What does that mean actually, physically, for homeowners or home buyers right now?
Home buyers specifically, the benefit is as the values of homes go up, you're still able to have an affordable mortgage payment. So even though the values of the home prices or the cost of purchasing has risen because values have risen, your affordability, because rates are lower, is more affordable. So if you were buying a home, let's say at $150,000 with an interest rate of 5%, your payment would be closer to $1,200 to $1,300 a month. At the same 150 at 3%, you're closer to $9,000 to $1,000 a month. So it still makes it affordable for a home buyer to purchase a home, even though values have increased.
Do you think we'll see it go lower than this?
Well, I'm not an economist, but based off the projections of the fact that the economy is starting to slow down and mortgage rates, and actually it's the 10-year treasury that affects mortgage rates. The fact that is starting to shift and it's starting to decrease, I would say yes. As the economy slows, as the economy gets worse in some situations, then interest rates will usually follow that.
Do you see any particular benefit for buyers of color with this rate cut at all?
The really good benefit, and this is what I see with clients every day, is banks determine, and I spoke about this before, banks evaluate a home buyer based off their risk factor and their income to their expense ratio. So if you have a lower mortgage payment or the ability to have a lower mortgage payment, it makes you a less risky borrower because your debt to asset ratio is not as tight. So it's an opportunity for those who had really tight debt to asset ratios. It's an opportunity for them to actually get into a home. The rule of thumb is 45% or less of your income to your debts. So if you include a new mortgage and now you're able to toe that line in a solid way, it allows you an opportunity to get in a home where a year ago you may not have been because you're at 48% of your debt to asset ratio.
And it's great to hear about these low interest rates and home prices and whatnot, but what about actually qualifying for a mortgage?
And that's what it brings it back to. So
your credit score?
Your credit score, there are more to buying a home than just interest rate. Thank you. There is your credit score and your DTI. So I talk about that a lot, debt to asset ratio. So with that, it gives you an opportunity to pay down debt if you already own a property or if you have credit cards. If you have credit cards that have a higher interest rate, now is the time to call them and ask for a lower one so that your minimum payment or your payment on those credit cards go down, which means the interest that they're charging you on a monthly basis, which keeps your balances high, is minimized. So that gives you an opportunity to pay down your debt so that you can lower that DTI, improve your credit score, and get into a new home.
Good advice there.
And there are programs available to help people that may not have a great credit score.
Yes,
right?
There are non-profits. A lot of realtors consult. I would always advise a client, if they're thinking about buying a home, talk to a licensed realtor and a member of the National Association of Realtors so they can pair you with the right product, the right lender, and the right credit agency, because they're not all equal and not all guide you in the direction that you may or may not need to be in. So always start with a buyer's consultation with the realtor. Let's assess where you are and then give recommendations on where you need to go.
And what about refinancing?
This is a great opportunity for refinancing. If you have a 4% or 5% interest rate or higher and you can go 3 or lower, I would start watching the rates. You want to refinance when you're at a 1 to 1.5% rate difference from where your current mortgage is.
That makes it worth it.
Yeah, that makes it worth it because refinances do come with expenses. It has closing costs because you are having to record your mortgage in a public record. So you will have some closing costs affiliated with that, and it only makes sense to do that if the money you're saving offsets the expense of it.
Okay. Good to know.
All right, Tiffany Hamilton, she knows of what she speaks. Thank you so much for sharing your knowledge.
Thank you for inviting me.
All right.